Stocks are slowly climbing inch by inch as today is the day of the Brexit vote. I'm Olivia Bono-Voznenko, and I'm here with Sarge Guilfoyle to cover all the action for us. Sarge Guilfoyle, hello.
Hello, Olivia. How are you today?
I'm well, thank you. How are you?
Very awesome, thank you.
Well, the day has come of the Brexit vote. Stephen, what will the short-term effects be if they Brexit or if they Bremain?
All right, it looks to me like we're pricing in the Bremain at this point. Everything's kind of priced for perfection. Debt instruments have come in a little bit. Stocks are really trading up against that 2108 S&P technical level. I think the idea here is that is that we're probably going to have a little bit of a sell-off tomorrow. I'm thinking if you have the Brexit, of course, it's going to be a rough day for equities. But even if you have the Bremain vote, you may have a sell the news event because everything seems like it's priced so well that they've almost counted on something that they really shouldn't be counting on just yet. So I think you might have the knee jerk to the upside, but then you probably have a sell-off. And you know what? We'll know before we have to make any decisions. Europe will let us know what to do.
Yeah, so what specifically will be affected?
The financial sector. Financial sector will easily be the most impacted. The exchange rates, bond yields, they impact the financials. The financials are what's going to lead us one way or the other. They are your winner today, let's say, through half a day. They have been the most volatile on a regular basis of late over the last 2 weeks or so. And tomorrow, there is no reason whatsoever with the Brexit vote, with the banking stress test coming out of the Federal Reserve tonight, with tomorrow's Russell rebalance, that wouldn't be your most volatile area.
Okay, and coming back to the U.S., we have new home sales, jobless claims, any domestic data jumping out today?
Yeah, the new home sales is very disappointing. I mean, they only missed by a little bit on the consensus from May, but the April revision was very poor. I can't say the numbers very poor over like a 6-7 year window, but it was a lot poorer than it was when it was first reported, so it was disappointing. We've had decent numbers from home builders like Lennar and KB Homes the last couple of days, which kind of put a happy spin on things. And they're not really taking it on the chin because of this, but it's one more disappointment. Just when we thought that GDP might be ratcheted up another notch, maybe get itself over 3.0%, this kind of makes you think maybe not. So we'll be watching the Atlanta Fed GDP Now forecast.
Awesome. And is any of the data today or the Brexit chaos overshadowing anything?
Well, it might be overshadowing those Fed stress tests just a little bit. I mean, today's not the big one. We'll get that at 4:30. Next Wednesday is the bigger one, but they still do have to look at a 10% unemployment rate, negative interest rates, things of that nature. The reason why next week's on Wednesday is a bigger deal is because they worry about insolvency then. They do a stress test where one of the major banks goes insolvent and they see how the others in their simulation react. That's why it's a bigger deal, and that's why dividend decisions going forward by those banks for their shareholders will be predicated on that.
Well, it'll certainly be an interesting week next week. Stephen, thank you for giving us the play-by-play.
Anytime. Thank you.